Let's just pick up on the price action in oil. A bit of life coming back into the oil market again after OPEC+. How do you see the price action in the last few weeks?
We're reasonably relaxed about that oil price. I'm the economist. I make the long-term forecast for this part of the world. We need a stable oil price assumption. And we've been running with a base case that oil averages around $80 a barrel this year and into next year as well. I think what we're trying to get to there is the idea that oil is range-bound. 70 when the world feels bad, 90 when the world feels good, and 80 as a midpoint there, which deals with the region's fiscal and external account needs very comfortably.
Yeah, so your oil team have $80 a barrel penciled in for the second half of this year, below where we are right now. They've got $76, 76.5 to be precise, in 2025. Ultimately, they see supply outpacing demand. But because you're an economist, what does an oil price of around $75 mean for the region? Is it something to start worrying about, or is it manageable?
No, I think it's fine. And again, $80, which runs through our forecast, is a comfortable number for pretty much all of the GCC economies. Public finances are reasonably strong. Current account position is particularly strong. It's the kind of number, I think, which helps to support sentiment amongst policymakers and amongst the corporate sector as well. For me to get worried, I need to see an oil price that's settled below 70, 6 handle on the oil price. At that point, I think you start to see some more difficult questions being asked about that macro outlook. But for now, no, I'm relaxed about the oil price assumption.
So give us a sense of just how activity is going in the region. I know we just had a recent batch of PMI numbers. It seems like the momentum is still there with Saudi. Qatar also had positive momentum month to month. How does that square up versus other countries in the GCC?
I think it's looking pretty good. We've started to get the first quarter GDP numbers coming through. Saudi and Oman both printed their numbers for Q1, and they were positive, reasonably strong nominal growth, maybe a little bit of a loss momentum in the kingdom, but the underlying drivers are still there. And yes, those high-frequency indicators give us every sense that momentum has continued into Q2 as well.
Well, let's pick up on those Saudi GDP numbers, because the overall number, I guess, masks the difference that we're seeing in the oil output versus the non-oil output. Obviously, with their push to diversify the economy, they will tell you that they're focused more on that non-oil GDP number. But that, at the end of the day, is still very much so a hydrocarbon economy. So how much of a weight do you give the breakdown between oil versus non-oil?
The headline number can be terribly misleading. It can rise and fall depending on what's happened with OPEC production. What I care about, what I'm trying to understand what's happening with the underlying economy, the kind of economy that households experience, and corporates experience, investors experience. That's oil, all about the non-oil economy. There we've got growth running around sort of 3.5% and 4.5% over the first quarter of this year, the kind of level we expect to persist over the rest of this year as well.
Do you see the geopolitical tensions in the region impacting any of these economies materially?
We're all very aware, obviously, of what's happening in the broader region, but I look at economic performance, look at market performance, as well as a sense that the markets are looking through what's taking place. It's a very rich region. It's able to cope with the kind of shocks that a further deterioration of the geopolitics might bring. And when I look at underlying economic performance, look at what's happening with the markets, look at what's happening with investment, look at the sentiment indicators that we see, tourism numbers as well. So far, they're holding up really well.
One area where it's not holding up is FDI, though. You're not seeing that coveted FDI come into Saudi Arabia, which is what the Crown Prince wanted to see. I
don't think that's a reflection of the geopolitics. I don't think it's an even story across the region either. Certainly, if you look at the numbers for the UAE, those FDI numbers are really, really strong. And again, a sense that for long-term investment, there's an ability to look through some of those near-term risks.
Let me ask you about Egypt before we go, because there has been a lot going on in the Egyptian economy. They secured that investment from UAE. They've come to an agreement with the IMF. Are you seeing a turnaround in terms of how the economy is reacting to the securement of those agreements?
I don't think I'll talk about a turnaround yet. I think it's too soon to be talking about recovery, but I do see in the data some very strong signs that the economy is stabilising. The currency has held that kind of 45-50 level pretty well. I look at the external account data. I can see a big improvement in the net foreign asset position. Central bank reserves are now at the highest level ever. Inflation is high, but it's starting to trend down. There's a bit of fiscal room for manoeuvre there as well. So, yes, I do sense that there is stabilisation taking place in Egypt, but I think we're going to be having to wait a while before we can start talking about a return to growth.